Hey, thanks for joining me. Sunday, 21st of May. I'm going to see if I can give you some Forex trade ideas and some decent analysis for this week. We're looking at the dollar index chart here. I thought that was going to be a double bottom low just above the green 500-day moving average, which you can see just appearing at the bottom of the screen there. And then I thought we were going to take off, but we just traded sideways in some sort of triangle pattern. We finally broke above the trend line, broke above the 50-day moving average, and now we've broken above the 100-day moving average. So it's becoming a little bit more positive for the dollar, even though we did ease back on some relatively dovish comments from the Fed Chairman Powell on Friday. But I'm going to stick with what I think is probably a recovery in the longer-term bull trend off a double bottom low just above the 500-day moving average. Looking at the longer term chart, so the dollar certainly was in a bull run from the beginning of 2021 up until September of 2022. Good run. I'm going to consider this a correction at the moment, not the beginning of a bear trend, as we hold onto the 100-week moving average, which has a similar value to the 500-day moving average for obvious mathematical reasons. I was just looking to see whether this candle the week before last was a bullish engulfing candle. Not quite, but pretty close and good enough, because we did beat the highs for the last 3 weeks. I think that the dollar can continue to push higher. We're moving off an oversold area on the weekly chart as well. Now onto the 1 hour chart here. We've held the 23.6% Fibonacci level, which is just above the 500-hour moving average at 102.88. And we've got a trend line going up there as well. So 103.00, 102.90 is going to be absolutely key for the dollar index at the beginning of the week. If we continue to hold that level, then obviously we are in a bull trend. I like to look at these moving average crossovers, especially on the 1 hour chart. If you want to know more about my moving average strategy, then keep an eye out. This week I'm going to release an educational video just on how I use moving averages. Make sure you are subscribed and you have rung that notification bell so you don't miss the video. Okay, the moving averages, the 100 has crossed above the 200. That's a bullish sign, confirming that we do seem to be in a short-term bullish trend. And the fact that the dollar index has moved convincingly above the 500-hour moving average is also bullish. Aussie dollar versus the US dollar. It's a beautiful sideways consolidation pattern if that's your thing. It isn't my thing. I find them very difficult to trade. But if you just trade the resistance level, which is up around the 38.2% Fibonacci level of 67.80, the 100-day moving average around the same area, and this trend line that I've got on there at around 68.00, now we have been selling that area. Hopefully you've done quite well doing that. When you look at the weekly chart, I would favour a move to the downside. We got a decent recovery up to the moving averages on the weekly chart. 200 and the 100 held beautifully, and we turned down. So I'm thinking this is probably a consolidation phase and we'll break to the downside, but I could be wrong. So don't sell into a short position. Wait for the price action to confirm the move. Euro US dollar reflecting the sort of moves we're seeing in the dollar index. In other words, the euro has been weakening. In fact, this has been quite easy to read. We had this consolidation pattern up here, which we actually traded quite well. We were buying it down at the support levels, selling it up at the resistance levels. So we were making some pips on this consolidation. Then once we had the breakdown, and that was very clear, we had a nice big red candle on the breakdown, and we did manage to get into a short position there, didn't we? I'm sure you did if you were trading along with me. Break below the 500-day moving average was further negative confirmation. Break below the trend line. We were getting into shorts on Tuesday, and we ran those shorts down to my target. Stabilizing on Friday, moving sideways, but still holding below the 100-day moving average. So I think for now, the outlook for the euro versus US dollar is still quite negative. On my trade sheet on Friday, I had minor resistance at 108.00, 108.10. Now that was beaten because we got up to 108.28, but as you can see, I had my sell level at 108.30, 108.40. So that's unfortunate. We missed it by 2 pips. But having said that, there wasn't a huge amount of profit on a short position anyway, so it wasn't really much of a missed opportunity. Pound versus the dollar, I think, is also quite negative. We have broken down through my trend lines and the 23.6% Fibonacci level of 24.72. We had a little bounce back towards there on Friday, reaching 124.83. But I still think, despite that bounce back, that the outlook is quite negative. We're getting oversold on the daily chart, but I wouldn't worry too much about that. Longer term, I've got good reason to think that cable's probably topped out. We've held the 100-week moving average, the blue line. We've got a trend line going back to August 2022, which we rejected with quite a big red candle. Not quite bearish engulfing, but close enough on the weekly chart. And when I look at the 4-hour chart, could I argue that this is a head and shoulders pattern? Well, Maybe, but certainly we are getting lower peaks and lower lows, which indicates, of course, that we're in a short-term bear trend. We do have resistance at the 23.6% Fibonacci level at 124.72, the 200-hour moving average at 124.85. That's my quick look at currency markets. I'm not going to cover the yen pairs, but please look in the description box and there's a link there for you to sign up to get my daily analysis and signals.